Okay, and we're live.
All
Roy, how's it
right.
going?
Yeah, here for Bootleg Weekly, and man, there's been a lot of news. And it's almost all around one theme. So we're going to be doing a lot of talking about data centers and AI. Some software too, whether software is back. A lot of software names are super, super hot. We'll certainly talk about NBIS, CoreWeave, maybe even mention IREN, I guess. And this new Google news as well that just dropped. Tevis, I know you saw this because you sent it to me. I won't even ask hyperbolically if you saw it because you'll misunderstand and get offended. Just kidding, no. But yeah, there's a lot of news to look at. We're of course going to do our Q&A period at the end. So if there's things unrelated to those topics, we'll hit those in that time period, or we'll try to. Tevis, how are you doing today?
I'm doing good, man. It is midnight for me, so ready to get the stream started after a long work day. But it's been a good day, all things considered. Um, so yeah, happy to be here.
Says the guy who's like 30-40% of your portfolio is Nebius.
Yeah, yeah.
All right.
Over.
Well, I'll let Mr. Nebius take the lead. Which one of these topics do you want to hit first?
I mean, we can start with the Google news. That's fine.
All right. Let me go ahead and pull this up right quick, and then there are a couple of interesting things with it too. So it just dropped extremely recently. Of course, a lot of headlines ran with it. Let me see if I can. Well, let me do this. There we go. Okay, Alphabet announces proposed 80 billion equity capital raise to expand AI, infrastructure and compute. Includes agreement by Berkshire Hathaway to invest 10 billion in Apple in a private placement. We do need to talk about that specific piece too. And this is basically consists of this: 30 billion underwriting public offerings, 15 billion depository shares, 15 billion classic common stock. So in essence, dilution. 40 billion of it is at the market as well. These function a little bit differently, but yeah, that's a huge equity raise. It's for sure the largest. I believe it's the largest that they've ever done, other than when they IPO'd forever ago. And it's something that we've been talking about, just the rampant need for compute. When you have an environment where shoe companies are pivoting into this business, when you have an environment where people are prepaying before they even have the compute delivered years in advance, that's an environment where it's a massive gold rush and there's a lot of people entering. And you've seen that on the smaller scale. This is on the larger scale. And yes, long compute is definitely a trade here. So Tevis, first, did this shock you, or do you think that this was expected?
I think it's expected to see Google building their own infrastructure. Honestly, I thought it was going to happen a little bit sooner. Like a lot of the companies are already talking about CapEx. I mean, as early as when they provided full year guidance, they highlighted CapEx. I think you're going to see more ATM offerings like this from hyperscalers in the near future as well. Nebius just last quarter raised their CapEx expectations. You had GTC Taipei earlier today, and he was talking about all the advancements that are going on there and sort of dispelling a lot of the software is dead rumors. And it's interesting because, like, on one hand, the value proposition of AI is largely in its current state, not fully proven out, with hallucinations and the costs ballooning and to unsustainable levels. And so, like, on one hand, you um, it's difficult to quantify the ROI from AI. But on the other hand, you're making investments for the future with regards to the build out, because if there's one thing that's for certain, it's that the prices that you're paying right now are entirely unsustainable. And this is something that we talked about last year, Roy, where we were looking at Nvidia's growth rates and we were saying all the hyperscalers are going to be developing their own solutions in due time, because at the end of the day, like, you don't want to be dependent on third parties. It is the case right now because of the massive supply demand imbalance. But looking out several years, like, I wouldn't be surprised if Google has their own vertical integration, Amazon has the same, Meta has the same. largely the hyperscalers have been moving in unison when it comes to the build out phase.
Yeah, for me, I'm going to disagree with you, not just in principle, but I guess I'll take a step back. I think it was inevitable. This was sooner than I was expecting. I have a chart pulled up here for fiscal AI just to show you like the scale of the capital expenditure, and we've seen not even that long ago, like 4 months ago, a massive revolt against these hyperscalers from huge and increasing CapEx expenditures. This is a great acceleration of that. The other part that I thought, and Nate also called it in the comments, he said that the at the market was totally not expected. And I agree with that too. 40 billion at the market is extremely rare for a company of this size. I'm going to have to do I just saw this shortly before the show. So I'm going to have to do some research to see if like it's ever been done at that scale, $40 billion at the market. Now, it is like, we both agree that it basically showcases the demand that's there. Now, a couple of interesting things with this, and we'll do a pivot here into NBIS 2. Actually, first, let me throw up this just so I don't neglect doing something that I said here. So this is Google's capital expenditure here, and if we look at this this is over the last 12 months, so you can see it's accelerating greatly. So we went from an environment in 2023 when they were accelerating for sure, and a lot of that was Google Cloud Computing, but 32 billion, and that's a massive amount for most companies. For Google, it's fine. Now they've more than tripled it, and with this offering, and of course, there's still a lot of news, I think, to come out around that. I mean, that's a huge leap up. So if you thought that this was acceleration, you're only just beginning to see this. And just as we saw with Amazon 4 months ago, where they had to do an equity offering as well, although it was not at the market, I believe, to fund the capital expenditures, Google, as profitable as they are, and let's take a look at that too. Let's do net. Well, let's do oh yeah, I'm on the wrong tab. No wonder why. Total revenues, we'll do 2, and then we'll do net income. So like they're massively profitable, right? One of the most profitable companies in the world, and yet they have to raise. And I think that this probably is going to indicate that any AI company, so Amazon obviously has had to do this. I think Meta will probably enter into this even more aggressively as well. And Microsoft, even though they have built out a little bit ahead of time. But yeah, this is a great increase. Now, the other thing that I thought was surprising about this was this part right here. Do you think that 10 billion investment in Apple for a private placement to fund this project would have happened under Warren Buffett? Or is this a Greg Abbott thing?
In Google, you mean?
Yeah. Sorry.
Yeah, that's the first thought I had, Roy, when I saw the 10 billion investment. I said, "Oh, this is the new guard of Berkshire making a statement." I don't know that that would have happened under Buffett. If you think about it, 10 billion is a drop in the bucket of the cash they have on hand. I think this is a very smart way that they can spend it, but at the same time, like I don't know that it falls squarely in like that, Warren Buffett style of investing. You have to have some type of a vision for what AI could be and what this build out could mean in order to invest that amount of capital, right? And I do think that we're going to see more investments of that nature from what's his name, Greg Abel, and
Yeah.
and yeah, like it's going to be crazy, man. The day we're going to see Berkshire go into an AI company or a data center or infrastructure play around the AI trade, because I don't think Buffett, wanted to invest in anything like that because there were businesses that were hard to understand for him. Like he could make money with simpler businesses following a more traditional valuation model.
Yeah. Okay, so before we do a full pivot, we're going to talk about, well, it's not even a full pivot. It's in the same theme. And we also, by the way, we'll be talking about the Nvidia news over this weekend. It's up. It's had one of its best days since I've been an investor. I'll just say that. So it's been a good time. A lot of investments. I think my portfolio is, again, at an all-time high, which is nice. But regarding this, does this concern you for other data centers now that Google is getting in? And this isn't just them nibbling or acquiring somebody. Well, they're ended up doing more than just that. They're investing a huge amount of capital. Um, are you concerned as a Nebius shareholder?
Well, I mean, when I saw the Google news, the first thing that I saw was the Nebius stock price after hours to see if it was going to be tanking or not, and it wasn't. I
It's up
think
a little.
Google is absolute. Like, I think everybody knew that all of these hyperscalers were going to move to their own solutions over time. Google's build out is going to take a while. Um, it's not going to happen overnight. I mean, Meta is also building their own like data centers as well, and they've already broken ground on the projects, but it's going to take a while to build. And the fact remains that, I mean, for the next little while, they're still severely supply constrained. And look, Nebius was saying on their latest earnings call that they're already signing deals for 2027. So they have visibility out that's further than 12 months, and they're making commitments that far out. I mean, of course, you have the Meta backstop as well. Like, there's so much, um, demand on that side that in a vacuum, sure, you could argue that this is negative for Nebius because it's just more, competition. But in reality, it's not, because we're still scratching the surface for what that demand is going to be. And if you
Yeah,
just give me 1 sec, Roy, I got to move to another room. I got to move this whole setup to another room because I don't have a charger.
yeah. Let me have the sharing permission rights while you move things over. Oh, he left. Okay, good. So yeah, on that, like I think this illustrates the incredible and insane demand, and I've been saying it for a while that I think that forward demand is underappreciated. Now, after this last month or two, it begins to feel like, okay, it's starting to be appreciated. It's hard to say it's underappreciated when a lot of the names are up double from where they were. CoreWeave is one of the exceptions, so it did move nicely today. And yeah, they're building a massive amount to be able to fund forward compute just because the demand is so near. Now, I did, by the way, do a deep dive on these three plays specifically: Nebius, IREN, and CoreWeave. The differentiation, I used a fun analogy there. The nebula, which, I mean, that one's easy, it's in the name. The landlord for IREN and the feedback loop for CoreWeave. It's free. Check it out on artemis.ai. You do have to sign up for an account. One of the things that I thought was interesting was I had a part of this argument because I did look at kind of the bear cases of why people are not investing in these type of plays. And of course, I looked at the winners and some of the small opportunities too. I'm like, yeah, hyperscalers will build their own, but like the reality is CapEx is so extreme and high that they may put that off for a while, especially in the face of a shareholder revolt. And then, like, literally, I think I published this on Sunday. So a day later, they're like, $80 billion. So maybe not. But I think that honestly, part of it is maybe people will have begun to realize like how immense this need is. Google is going to do the right thing for their business anyway. But also, it's just bringing things forward to where they were. Like the demand is so immense, like you said. I wouldn't be bearish data centers at this point at all, even if we see others following the suit. Um, with this being said, of course, Nebius has continued to move aftermarket. It's up, not quite 1% there. CoreWeave is up a little bit. I didn't look at IREN. I'd monitor that a little bit less. Well, and yeah, it's down just slightly, but it's like not meaningful. It's after hours. Do you know, or does anyone in the comments happen to know? Because this news just dropped recently, and I haven't had time to look. Has Google mentioned if they're going to be using their TPUs for this? And if so, it's going to be TPUs are very good for a specific use case and not as efficient or not as adaptive as even Blackwell. Or have they not said? Is it going to be a mix of products? Do we know?
Not sure. Thank you, Harry, for the £10. That's a strong currency, man. That goes a long way.
Oh
Um,
yeah,
that'll buy me like a whole TV in Canada, bro.
yeah. A little bit
Yeah,
stronger than the Canadian money.
I
Okay,
got.
so neither of us are bearish on data centers as a result of Google entering this space. I think it's going to be kind of like what we've seen with SpaceX, that they ended up partnering, of course, with Anthropic. And today, somebody had made a post on X, and they talked about like, hey, look at this incredible revenue return that they made this kind of investment. This is what they're expected to make for the next few years. And Elon Musk fired back, like, no, you're getting ahead of yourself. This is a short-term deal. Why? Because they built out the capacity not to sell it to others, but because they need it. They expect to need it in the future. And I think that that's really what it is for Google. It is one fewer player out in the market that's going to be scrambling for this, but I think it just validates the thesis here.
Oh my God. Yeah. Canada is so fucking toast. Yeah. Let's not start that early in the night, Blake, with this shenanigans. Okay. Don't get me riled up that early in the podcast. We're 15 minutes in, bro.
So let's talk then our two favorite data center plays. And so I think that you can take the lead because NBIS very slightly outperformed CoreWeave today. They both did very well though. So go ahead, like tell us why you think NBIS is moving this far. It smashed through an all-time high at one point. I think I saw it at 275.
Yeah.
It's last month when you were talking about 200, like sustainably, people kind of rolled their eyes, and I don't think anyone's rolling their eyes. How high do you think this can go? Are you taking profits? Is it too rich for your blood and you're pivoting to other plays? What's going on with that?
Yeah. I found it funny how somebody tagged the both of us saying, I need to now apologize for the crap that I was giving you about CoreWeave. And then Roy responded. He was like, CoreWeave is up like 8%. NBIS is up 18%. He's like, I don't think NBIS is going to apologize. Look, man, one thing I'll point out is that NBIS still has a like 20% short interest roughly, right? And I don't know if that's going down right now or if that's a squeeze, but I wouldn't discount that possibility that there is something that's happening behind the scenes. I mean, last time the stock was going up in this fashion was Leopold buying 5% of the company behind the scenes. So I don't know what's going to happen. One tweet I made today was I would suspect management is going to dilute or raise the remaining CapEx obligation. Right? I wouldn't be surprised if they take full advantage of the price. As for my position, I closed my NBIS cash secured puts that I opened 2 weeks ago and closed about 70% profit. I remember in the pod I said, "Oh, should I write on Micron or should I write on NBIS?" I ended up writing on NBIS and I closed them. I have covered calls for my position. Some of my covered calls are absolutely going to be underwater. I'm letting those ride. And if those shares get called away, then great. It's a forcing function for me to take some profit at a great price. I'm still keeping the majority of my dude. I wrote I wrote covered calls for Friday, Roy, for 340. And at one point there were $2 of premium. 340 for this Friday, like 4 trading days.
Yeah,
And
imagine being degenerate enough to just like buy those instead of sell those. But I mean, like honestly, that's way too risky. Like even for probably somebody like you. So you've got quite the risk profile.
Well, I mean, look, I take on risk, but like it's like if I buy options, it's always like at least a quarter out. I'm not buying options like today for tomorrow. That's crazy. Anyway, so the point is like, are we frothy? I would say so. Are we fairly valued? I would say so. Should I take some off the table? Probably not a bad idea. I mean, I don't know. But at the same time, like Anthropic deal could drop tomorrow. This thing could go straight shot to 340, and like I didn't even so as aggressive as that 340 premium was, Roy. I still didn't write it on my full position because it was like there's always an off chance that this thing can just jump another $60, and then I'm like fully out of NBIS. I mean, even if I was fully out of NBIS at some point, let's say by the end of this week, if I wrote my full position, it would still be a 3x on my largest holding. And like, could sell everything and never make another trade again until January 1st, 2027 and still outperform all the indexes. And so
Yeah.
it's been a terrific year. I don't want to cut it out of Nebius, but like, I don't know, man. I've seen stocks go straight up, and I mean, I don't know. Like, I haven't had as much experience as some others where it's just like, oh yeah, let me invest in Robinhood at like $7 and it goes to 14 and then it goes to 34 and then it goes to 60 and then it goes to 75 and then it goes to 140 and it's just like 45-degree slope. I've had the SoFis of the world where they go to 32 and then I get disappointed and they come back down to 15. So I'm like, I don't know what to expect for Nebius. Is it going to go to 300 and then it's going to come back down to 150 and then it's going to go back to 300? Or is it just going to keep going? Who knows? Is the wider point. But it was interesting today that like news headlines came out where the conflict with Iran was not looking as positive as uh, we had hoped. And then just Nebius just could not care less. It just kept on chugging. And so that to me signaled that there's something going on behind the scenes here. Somebody's accumulating a big position, or there's shorts that are being squeezed out. And I also think that this Leopold guy, like, he's not going to buy 35% of his portfolio to make it Nebius, over 5% of the company for just what, a 20 to 30% move. Like, just the announcement of him buying moves the stock that much. He's buying for a 2 or 3 or 4x. And so there's still a lot of catalysts, but look, let's not kid ourselves. I think Nebius at this valuation is fairly valued. I mean, like, it's almost $70 billion in market cap right now.
Yeah. Uh, I think it's ahead of itself. But that doesn't mean it can't run more. Like stocks could definitely do that. Yeah, I think you make a good point with especially institutions. Like some of them are quick to take a profit, but a lot of them are like, hey, we're just going to let it play out and see what happens. Of course, Leopold has a massive position in CoreWeave too. And today was a pretty good day to be a CoreWeave investor. I actually added 33% more in the overnight market, Tevis, after doing my research last night. Not last night, but starting really at this point last week, and in this space, getting ready for that article, I was just more convicted than ever. And I'm like, hey, I need more CoreWeave. It's up like 5% in the overnight market. Let me just buy it. I hate that it's up, but I wanted to build that out, and I did that with my Nebius funds. My Nebius was pretty far underwater. It no longer made sense to roll out. And like one of the dangers with, and so like by the way, you can see it here, up almost 14%. So when these were neck and neck all day. At one point, Corey was a little bit ahead. The Nebius. I think both are winners. I basically said that in my article. I think IREN is also going to be fine. Not my favorite. I would rank them Nebius first as far as quality, then CoreWeave, then IREN. And a lot of the smaller plays I think will be okay and interesting too. But with CoreWeave themselves, there was a piece of news that came out beyond just like everything in this space absolutely running and being heated. And it was in regards to this right here. So Michael Dell, yes, this is the CEO of Dell Enterprises, said that they have the first Dell Tech and NVIDIA Vera Rubin, and this is through CoreWeave. And of course, CoreWeave has kind of a unique relationship with NVIDIA versus like a lot of NVIDIA's customers are like the Googles of the world, which are like, hey, we want your amazing GPUs, but we also want to create competitor products. CoreWeave has no ambition in that. They have a very close relationship, and so they are typically going to be first in line for these, which is a really good positioning. Now, they of course do more than just bare metal. This isn't a CoreWeave deep dive, but I was just looking at this, and the more I studied, I'm like, I need to get my position larger. So I did that. Now, on the other side, like part of the reason why, if I had not had deeply underwater covered calls, which I can't be too mad about a double in like 2 months, but if it wasn't for that, I probably would have just kept my Nebius and bought CoreWeave. But the reality is, if I just kept rolling out the calls, I'm not making any money, even as Nebius is going up massively. I'm not making any money because I'm missing out on CoreWeave. And so there's a point when this happens, and it's only happened on a couple of names, but it does happen, where I'm like, okay, is this just time for me to say, okay, it's gone past me, maybe it'll retrace and I can get back in? And I'm happy to do that at a higher level than my covered calls. But I just saw CoreWeave as a screaming opportunity, and I really do think it'll outperform Nebius probably over the next year or two. But That's not to say I think NBIS is going to do poorly, because I don't. And I even saw some people here today, like with CoreWeave, just started to move. I think I even saw one of the comments. They're like, "Hey, is it too late to get in?" It's like Core is not even at an all-time high. I don't believe. I don't think it's close. Let me see here. Yeah, all-time high was 137.98. It's at 124. Now that's not a reason to buy, but I'm just saying, like, the run has just gotten started, and I really do believe that. Now it can retrace. It can go back below 100. I'm not in it, to try to double in the next 2 months, like with Nebius, though I think that there's a very decent possibility that it does, and I am here for it.
Yeah, I think both are going to do well. I'm not against, like one doesn't need to fail for the other to succeed. Interestingly, Roy, there was one name that didn't participate in this rally today, and that was IREN. IREN was up, what, 2%, and it was negative for like a good chunk of the day.
Why are
So,
you smiling, bro?
sorry, I can't help it. Is
I
it
know.
that is it just that these IREN bulls are rotating into CoreWeave and Nebius, or what's the deal here?
So there's several reasons why I like IREN less. Now, if CoreWeave and if Nebius didn't exist, I would probably be all over IREN. So I'm not saying it's bad. I just think that their differentiation right now, being like the landlord of having their own power stack, their land and everything built out, that's a nice thing to have. I don't think it's necessary necessarily. And they're of course doing a pivot in their business away from their main business. There's a lot of different factors, but I think the market sees Nebius and sees CoreWeave as a pure play, and I think that they see IREN as mostly that, but it's still a bit of a hybrid. And there's been some execution stuff that I haven't frankly liked with IREN as much. Now, I don't think it's sketchy. I'm not like worried or concerned. I think that there's some bumps along the road, and so I'd expect out of three, it's going to perform very well. I'm not like hating on IREN or anything like that. And honestly, like this kind of feels, to take a step back, in a way like your analogy with the Mag 7, where you're like, hey, whatever the Mag 7 is that's lagging, a simple strategy would just be like pivot into that one. They're going to be just fine. There is a place to do that. If IREN falls back to like 35, $40 a share, that's a stupid price for the opportunity. That's just dumb. I don't have call options at all in CoreWeave. I didn't have any on Nebius. Kind of wish I did. I'd probably buy call options there, like a lot of them, not just like nibble. So, but I think that the market is just very much attracted to the pure play, and it's a lot easier to understand exactly what's going on, what they're executing on, versus like IREN, you have to be like, okay, well, this is a revenue, but they took a hit because of Bitcoin, and this is their cost, but they were also mining, but it's a little bit harder.
Yeah.
Do you agree with that, or do you think that there's more to that?
I think there's more to that, but I also agree with that because I see it in two layers. The first layer is the macro demand of saying they're all going to be fine because the supply demand imbalance is the rising tide that raises all ships. But the second layer is over time through execution, the good companies will separate from the okay companies. And I do think there is something to be said around Nebius's differentiation factor, whether you could argue their subsidiaries or their execution, the quality of their deal, the prepayments, the fact that they're going all across the stack with inference and token factory and everything else. Whatever piece you want to latch onto to argue that's your moat, they do have a moat, and it's a matter of, does the market realize it now, or does the market realize it as we get further along into this race? But I do think that all will do fine because they're tackling a part of the market that is high demand right now, and so they have leverage in that negotiation. But I also think that over time, few will break away from the pack for the rest.
Yeah, and like, so one of the things that I note in the article, as far as the smaller plays, a lot of people throw out a lot of names, and I've looked at some of them, and there's probably some in there that are just like ridiculously strong and well positioned. But there's so many, Tevis. There's so many.
Yeah.
I kind of realize the scale of it. as I was doing the research, I'm like, okay, I knew that there was a lot, but it's dozens and dozens, probably several hundred, honestly, publicly traded companies that are or pivoting into that direction. And one of the cautions with that is exactly what you said. Like
Yeah.
IREN, there's some execution risks there, and it is a pivot. A lot of these other businesses are pivots. There's execution risk, but it's even more extreme because they're not already at the size. They haven't secured the partnerships. They haven't already contracted the supplies to be able to build these out. They haven't experienced anything like this before. And a lot of these, a good number of them, and I need to figure out like what percentage, but as I was looking at, like there's a ton that are just single site data centers. That's it. So let me see if I can actually pull this up. Yeah,
Yeah.
this is. I don't know if you've seen this resource. Well, am I
Is
on
it
the
the one
right
that
one?
Dylan made?
No, it's a map that shows all the data centers in the that are going in and the clusters. Oh yeah, here it is. It is this one. All right, so this is worldwide. There's 11,500. Now, a lot of these are data centers of the type that you would have expect before the ChatGPT moment. They're not specifically like AI factories or anything like that, but there's a huge number of these. I believe that there's 1,500 that are currently contracted that are planning to build out, and this is just across the United States here. It's an exceptional amount. When you actually click on a lot of these, like we'll even take some little place like Utah doesn't have a lot. It's still 43, and you can click on individual ones of these and actually see some of these are the same names, and but a lot of these, when you look at some of the smaller areas, like well, not Cirrus, they're either owned directly by like the Oracles of the world or the Lumens, but a lot of them too are single source as well. So if you're building these out, you're a smaller company, you're making this pivot, like what happens if NIMBYism hits? Like people are protesting, they shut you down. Now, a lot of the other larger providers, that's more of a delay than anything. Like if they have to, they can find a new location and be up and running, but it doesn't shut down everything. It's just one site. But if you only have one or a couple of sites, all of a sudden you are delayed as far as getting that revenue by another 6 to 18 months. And that's really bad, especially if you're funding your model by debt.
Well, uh, speaking of NIMBYism, have you, first of all, thank you, Big Rudy Smasher, for the $5. Have you seen Jeremy and Jacqueline on X? He has a short position on Nebius, says Nebius still has ties to Yandex and the Russians, worth a look. Yeah, we'll definitely take a look at that. I'm not too concerned about the background. They've proven that they can execute, right? So I think that's the main thing. Speaking of the NIMBYism, have you seen this, Roy? So I won't play the music, but essentially, there's a pitch right now for Nvidia to have a deployment of these like mini data centers on residential homes, and they're gonna pay you to be able to install these. Um, Kind of interesting idea. Uh, I'm not sure if you saw this. Nvidia can pay homeowners up to 1,000 a month to host the mini AI data center in their backyard. From the street, it looks like a normal AC unit. Inside are 16 Blackwell GPUs. Bro, if this happens, be prepared for all these communities to get broken into, for all the Blackwells to get stolen. There's no way that's not going
It's
to be the case.
Yeah, and we will get to the NVIDIA news because even at a smaller scale, on-device AI compute is a thing too, and we knew that it was eventually going to go this direction. Interesting to see NVIDIA in there. Before we leave this topic here with WS CoreWeave and IREN, let's take a quick look. So here's the charts on all three, and so you can see which one has outperformed this year. Nebius. It's the one that Tevis and I were in. Tevis pounded the table long enough that I finally listened to him somewhere back in March, and it's been a good ride. It's been a really good ride. You can
Hell
see
yeah.
that CoreWeave until really today, I think, has underperformed IREN. IREN, I think, is probably fairly priced. CoreWeave, I think, is undervalued. Nebius is a little ahead of itself. But again, like if you're looking at getting in the space, figure out which one you like. Read my article. Like I said, it's free. Read what other people have said. Figure out which one you're most comfortable with, what strategy you like the best, and likely you're going to be looking pretty good. I want to ask you, as far as price predictions on these three, where do you think that each of these line up at the end of the year?
Well, I mean, Nebius is the easiest one for me because I've actually done the modeling on that, and I could see that at 350. Interestingly, Roy, $100 billion market cap for Nebius is about 398. Let's call it 400. So 350. I think it's it was more of a stretch when I put out the video, man, because this thing was at 200 or 180, and now it's like 270, whatever it closed at today, 265, and so 350 is. I guarantee you, mofo's, if we hit 350 or when we hit 350, I am not coming out with the 12 months. I'm not going to do this exercise every 2 weeks with you guys. Like, it was 200 that got hit. It was 350 that's gonna get hit eventually. One Anthropic news article is all we need for that to get hit. But really, I think 350, for Nebius is what, a market cap that's around 80-ish billion. I think that's a good range for it to be, given the multiple that we're looking at for their ARR. Now, of course, if they raise their ARR guidance, if the data center build out goes better than expected, there's a whole bunch of factors that can change this arithmetic, but I don't see it. Um, I don't see it like deserving something much in excess of that. I'm sure it
Mhm.
can go. I mean, this thing can go to 1,000 if you wanted it to, but I would call it like it is, which is overvalued at that valuation. I'm saying here we're fairly valued. I'm saying 350 in 12 months, not 12 days, not the next
Well,
12 hours, 12 months is fair.
okay, so end of the year though,
Yeah. Yeah. Yeah.
you're
We'll call
saying,
it, yeah, we'll call it end of the year.
so end of the year you're saying 350.
Yeah. Yeah. I think
Okay,
350. I mean, the 12 months is like buffer for me in case we get
yeah,
like a
yeah,
large drawdown or something like this. But like end of the year 350, I could totally see it. Dude, I can
yeah,
see it every other week 350.
and so yeah, these are not price targets; these are just guesses. So take his price targets completely differently. Yeah, I don't think that that's crazy and unreasonable. Now, CoreWeave has the exact same market cap as Nebius. And it's currently at. Let me make sure it's not moved since then. Yeah, 125. We'll call it. So where do you see it at the end of the year? Actually, we'll take it one at a time. I'll take a step back on Nebius. I'm going to agree with you. I say 350 is actually fairly likely with Nebius.
I think CoreWeave, if we think about Nebius to go to 350, which would be, I mean, let me just do the math real quick, but something in the 80-ish billion-dollar range. Um,
So it'll go up 20% from here. So that's another
yeah, yeah. So,
25.
so
So
yeah,
150.
no, I think CoreWeave should trade higher than Nebius. So Nebius at around 350 is about $77 billion. I would put CoreWeave at $100 billion. So whatever that ends up being, let me just do the math real
Yeah, do
quick.
the math.
Which probably is going to be something in the 160 ish range. But let me just 183 a share is $100 billion market cap for CoreWeave. So 350 for Nebius, 185, let's call it, for CoreWeave. I could see those hitting. I could definitely see those hitting.
All right. Well, it sounds like you should be in CoreWeave then. I actually think CoreWeave is going to be around 225 at the end of the year. Part of that is it's unvalued relative to this, again, massive revenue ramp. I do think that they might not get their full premium because I think the debt is one of the things that people do have an eye on. That's the only thing I can see. People say insider sells, but and it's too early to, I think, differentiate between bare metal and the Neo Cloud. But yeah, so 225 is where I'm at. So it makes more sense why I'm in CoreWeave than Nebius right now, which Nebius is a great company. Now, IREN is currently at 65.33 a share. Market cap is currently 23.35 billion. I could see this one probably about $90 a share, so another, not quite 50% up, but they have to execute, and so I'm going to drop that down just a little bit to give myself a little bit more playing room. I'm going to say $85 a share from here for IREN.
Yeah, so there's a couple of factors to consider. One thing that is going to catch every Nebius shareholder off guard is the margin compression, which is going to be happening in next quarter, and then we're going to have expansion continuing in the next couple of quarters. I think margins are a really tricky piece to look out for these buildouts, because they're still in high investment mode. The other thing is, obviously we can look at the connected capacity and work backwards from there to say, okay, what's the build out going to be, and what does that connected capacity translate to from an ARR perspective, and what's the multiple that we apply, like 8x ARR or 10x ARR or something to that effect. But the other thing, Roy, is like, well, we're going to get Nebius providing 2027 ARR guidance and possibly even raising 2026 ARR guidance as early as next quarter. And so both of those could send this much higher, because the market finally is starting to price this appropriately, where they're giving it more of the benefit of the doubt from that execution perspective, because they've consistently proven they can execute. The same argument applies for IREN or CoreWeave or any of these. It's just a matter of build out / connected capacity and translating to ARR, and what is the multiple that you apply to that.
Okay, so I threw out 85. Where would you put per share IREN? Just a guess, not a price target, end of the year.
What's it at right now?
65.
65?
So
Yeah, I think 85 feels about right.
The other thing, since you're throwing out a caveat too, like part of the reason why, like if you're an IREN shareholder, don't hate me for saying it. It's what I think, and I'm fine being wrong. Like I have a dog in the fight, but like if IREN like triples for you guys, like it doesn't matter to me, and that's awesome for you guys. So I'm excited. But they are running into last year comps, which Bitcoin did incredibly well last year, and so the head-to-head comps, even though that's not really the business that they're chasing and pursuing and building out right now, the reality is still they have those hard comps year over year. And I think that because of that, they're not going to get a fair premium or a full premium. Now, if that means that we see something silly with IREN, and like we're at the end of the year and the other two hit the price targets exactly like we think, 350 with Nebius, we see CoreWeave hit my price target at 225, and IREN's here at 65 with a much smaller market cap, that might be the time for me to be like, all right, I don't like it quite as much qualitatively, but it's still great. Let me pivot into some IREN. But I don't expect that, even with the overhang of crypto.
Yeah, I mean, it could happen. I'm like, there's definitely a price at which I would buy IREN, but I'd rather buy like the best company at an overvaluation than the worst company at an undervaluation, because over time they're going to continue to decouple from one another. So I'd be careful. If your argument is that you're going to buy IREN knowing that it's lower quality, then you're really riding on the macro thesis carrying the majority of that weight.
Well, so I again see this as kind of the way that works with Mag 7. Every single one of those companies are very, very good companies. Now, I have concerns with Apple, and I'd rather not own Apple. And Tesla, I think, is probably always going to be too expensive for me to get back into, but in the market can surprise me. But the other five, like, if I was like, hey, I need more exposure to the Mag 7, I have some that I have higher conviction in, like Nvidia, but that isn't to say that I'm opposed to buying any of the others. So it's not really, in my mind, a lower quality thing necessarily. It just, there is a price that when a business gets beyond perfection, that it's too high to pay. And if you still want exposure to that on a large scale versus chasing some smaller opportunities where I think there's more reward, but there's also more risk, it makes sense to make that pivot. So, and I think Nate hates IREN. I don't know. He said he'll never own IREN. I was like, wait a minute. He owned a bunch of calls, and we just had options. So,
dude, Nate lit on Nebius today. So,
yeah. Well, yes. I think I asked him. He said like 80 or 90% of his overall portfolio is at one of his portfolios. Sounds like the largest one is Nebius. So, he said that's a top signal, and so you're going to save Tevis's covered calls. So Tevis will send you $100 in the mail just to offset some of your loss.
Dude,
No, I'm just kidding.
this is literally how Covered Calls has unlocked girl math for stocks for me, because I will literally lose an entire like full year salary on Nebius, and I'm like, oh, at least I didn't end up, at least I booked this $200 in covered calls. Like, it's all good. It just, there's no proportionality at all, but it makes me feel semi good, semi winning, regardless of the direction it goes, even though it's completely different magnitudes. Um, but anyways, what was I gonna say? I was gonna say something that I forgot. I don't know. It'll come back to me.
All right. Let's talk some NVIDIA, and then we can always jump back if we need to. And we do want to hit those Q&A comments too. I do see some ones for sure I want to address. Some Robinhood stuff too. Robinhood's in Canada, by the way, now officially. So NVIDIA, of course, had a massive conference this last weekend. They teased. We talked about the tease as well. And we knew that they were going to get into CPUs, or specifically their N1 units. And this isn't what this is. This is something a little bit different as well. Microsoft was teasing this as well. It's a partnership. So RTX Spark is a 1 petaflop. And I'm like, that's a big number right there. Super chip. So you have CUDA, you have the RTX ecosystem, you have the CPU, you have the GPU as well, all in one unit. And this is designed for PCs. And the result is you have a lot of efficiencies gained as a result. So just the way that you can generate and run videos is pretty cool. But I think the most compelling thing is this, the 1 petaflop of AI performance. So this is designed basically the way that on-prem, but a much smaller scale is. So if you have this laptop, this unit or whatever, you're actually running up to a, let's see, where was it? 1 million tokens, an LLM with 120 billion parameters, up to 1 million token context locally. And there's a lot of things you can do with that too. So it's really interesting. It's not a cheap price target at all. I saw some at $5,000. And so it's definitely made for the high end, but it's purpose built for personal agents right there. And there's a lot of security bonuses as a result. So I know a lot of people have had concerns with OpenCloud, which is mentioned all over this. Because it's actually running on your system instead of, you're using somebody else's compute and everything. I don't know. I thought this was really interesting. It's just one of several ways that they're actually breaking into the CPU market. And they're actually kind of redefining it rather than just following and chasing Intel, which would be weird. If I would probably be less excited as an NVIDIA investor if they're like, hey, we're just trying to copy x86, which they are partnered with Intel, by the way. But yeah, I thought this was a neat offering. And there's a lot more that they discussed as well. Some of this I've not had time even yet to jump in and see what all of these are about, but this is just a list of the press releases from this weekend. And very exciting times to be an NVIDIA shareholder. NVIDIA, of course, jumped massively in price for NVIDIA. It's no data center play that you expect it to be up, 15% in a day, but I'll take 6% out of a stock. That's not bad at all. So it's
Yeah.
wild times when we look at that and it's like, oh, it's boring and it's mediocre. It's like, it's not. So on NVIDIA, did you see any of the press releases or specifically that GPU, CPU chip, the Spark, or in any impact on you? Or you're like, no
Eh,
big deal.
yeah. The main thing I saw on Nvidia was the Nebius segment, and they called out ServiceNow and they called out Palantir, but I saw Jensen holding up the two laptops, but I didn't really, you know.
And
I
CoreWeave.
and CoreWeave, yeah.
They
It's like
love CoreWeave
a
and
podcast,
Epics.
doing a podcast with Tanner, man. Like, just freaking CoreWeave, 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 CoreWeave. And
It's so funny. Like he probably was looking into CoreWeave a little bit before I was, like, seriously, but we hadn't talked or anything. I hadn't had the time to follow many of his videos, so I hadn't seen anything on CoreWeave that he was doing. And then when I told you I was looking into CoreWeave, then I was like, wait, he and Steve just talked about CoreWeave too. Like, wait a minute, what's happening here? So
yeah.
yeah, lots of opportunities. And as far as, like, I can see, like, some people look and say, hey, since they're actually shifting to on-device compute, Is that bearish inference? Is that bearish data centers? And the answer is no. Again, these are $5,000 units. Now they'll have these in other devices as well. There's already plans for some of this, but the need for the inference and the compute is massive. And what is happening on the enterprise level vastly outstrips what's happening with individual consumers and users.
Yeah, Matthew, I need to kick Roy and Tanner off they're not purists, okay? I need myself, Nate, and Manuel and Neil and nobody else. Okay, that's the dream team for Nebius. None of these traitors. Remove him
I
from
don't even own them.
please.
We'll take him in America. He's American now. He bought CoreWeave, and it doesn't get more American than that. So I think that the bar should be set 50% of your portfolio Nebius. Otherwise, you can't hold that call. So
50%? Just give me a week, bro. It's already at 40.
I know. I was like, you're close. And if BM&R, kind of lags, and the fintech stuff it's good, but not as good. Yeah. Before we go on to Q&A, there was one other topic that I wanted to for sure hit, and it was specifically software. So a lot of software names are up massively, really over the last few weeks. IGV, let's see where we ended up. I followed it early on, and it's up 5.94% today, Tevis, which this isn't an individual stock. It's an ETF of a lot of different stocks. So it's rare when you see something like this run this hard, unless there's an actual pivot or reason for that, or one business in particular is doing incredibly well. That's not the case with them. A lot of these stocks are up massively. We can see the holdings of IGV. So Oracle, of course, has been doing fairly well. Microsoft, Palo Alto, a lot of the cybersecurity names. Palantir's been doing decently well relatively. Salesforce was up double digits, I believe, today. ServiceNow is cooking. Adobe as well. And is this the bottom for software? And if so, are you looking to get into any of these or add to any of these?
I mean, look, man, I think Jensen is like Switzerland in this whole thing. Like, he doesn't care. He'll sell pickaxes to anybody who's buying them. But the fact that Jensen is like, hey, look, like AI enables these software companies, I think that goes a long way. I haven't seen, one man wield so much power across so many different tickers where everything he mentioned in the keynote this morning pumped like crazy. And he featured ServiceNow, he featured CrowdStrike, he featured Palantir, he featured a bunch of different companies. I think, look, I mean, we've been talking about this for several weeks, right, Roy? Around, okay, when we determine that software is not dead, because it's not unilaterally going to be dead, we're not going to cease to have software in the world anymore because of AI. Like, let's get real. Then the next step is determining, okay, what is the resilient software that has a moat that's tangible, and what is the software that can be abstracted away? And once you do that step, then everything else that has a moat is going to revert to the mean. And largely we've been seeing, I mean, ServiceNow is like the poster child of this. You have Bill McDermott who bought stock. You have a beautiful technical breakout. And right now it's just completely gapped up to the point where like I could see it going back into the 180s and higher in very short order. And I mean, Chris was the only one in our group that really caught it in a big, I mean, he put like 7 figures into it. So, I mean, good for him. But largely, like, it made so much logical sense because, of course, there was going to be names that were, disproportionately hurt. Interestingly enough, Roy, I kind of want to get your thoughts on this in the software names. Salesforce. Did you see the Salesforce news today? So apparently,
I think I did.
Salesforce opened a stake in Anthropic of about $5 billion. So they have an Anthropic investment that they made back in 2023, and it's now valued at $5 billion for Salesforce. They caught a bid today as well. I mean, Salesforce was up about 10%. And of course, this is a $171 billion company. So, having a $5 billion Anthropic stake isn't really going to change the trajectory of your company, but it's kind of interesting as well, right? So there's going to be a lot of software names, I think, that are going to be bouncing back. I mean, we'll see what happens with like the SoFis and the Hoods of the world, the fintech names. But yeah, opportunities all around, I think, in this market.
Yeah. Um, and Salesforce is not my favorite name, but a lot of these, whether they are duds or darlings, like they've been running, and there's been real results too. Like cybersecurity has been incredibly hot. Datadog, of course, has been doing some ridiculous things. Snowflake as well, incredible earnings. So it's not just speculation. Microsoft, of course, caught. Well, part of it was the conference over this last weekend, but they've been catching a bit as well. So I think that some of these names for sure have bottomed. I think at the very least, even if it's not time yet for the whole software sector to continue to rotate, that this isn't sustainable, it's got to be pretty close. It's at least to the point where the market is starting to differentiate between the darlings and the duds. We're already up, actually. If we look year to date on IGV, it's up 4.6 now, and it was at one point down almost 30%. So even names like Wix, which have been like
Yep.
no strength and beleaguered and just trashed, it went up a nice 10% today. So that was
Yeah,
nice.
that's also in our Q&A to cover. There's two more things that I want to very quickly cover. Okay, the first is Anthropic filing for IPO, $1.8 trillion. Wild, especially considering they just raised money like what last week at 965 billion. So the fact that they're like, yeah, fuck it, double it, for their IPO is crazy to me. Any thoughts on Anthropic IPO, Roy?
I mean, like, yeah, I thought it was a better company over OpenAI for a long time, like well before the market thought that, and I think the market realizes it now. It's going to be like this is quite the year, and you can think of the ramifications with these superheated IPOs and a lot of speculation. Like it's anybody's guess what impact it has to the rest of the market, especially as some of the index funds are like, hey, let's change our own rules so that we can actually get these in pronto. But the other thing that I have kind of wonder in the back of my mind for you, Tavis, and I'll answer first. If you had to, and IPOs are normally, not the time to buy, and if you want a larger entry, look for something over the next 6 months. Although anything can happen, but especially when it's this size. But if you had to buy and hold either Anthropic, we'll throw in OpenAI as well, and SpaceX for 5 years, which IPO would you rather buy? My answer is Anthropic easily.
Yeah, Anthropic, SpaceX, OpenAI would be the order that I would rank those.
All right.
Yeah, I mean, would you buy Anthropic at 1.8? It's cheaper than SpaceX.
I mean, that's like saying, hey, this $60 pizza is cheaper than someplace down the street that sells it for 120. It's like, that still ain't cheap. So, no, I mean, I might buy like a share or two just so I have it. It's on the radar, but that's it. So,
Deep Cheeks, thank you so much for the $5. Says 25,000 shares of Nebius at $24 average. How do you get through all the pain? You should be teaching a masterclass to us around that, not the other way around. Because holy, I thought I was concentrated, but that's a whole different. You got me beat by a couple thousand shares. Let me put it that way. Thank you so much for the $5. Okay, second topic that I want to talk about before the Q&A, Roy, is the fact that Rocket Lab was down 12%, bro. Did we not talk about this last week? I said, hey, look, as we get closer to the SpaceX IPO, there's going to be profit taking. It's going to be a sell the news event for space stocks that have run in anticipation of SpaceX. Now, I'm not saying like, oh, I called it, because obviously SpaceX is not public yet and Rocket Lab is selling off. I found it really strange, however, that Rocket Lab was not participating in this rally. A lot of the software names, of course, the AI names. I mean, the day that Nvidia is up like 6%, for Rocket Lab to be down 12, I couldn't help but attribute it to the looming SpaceX IPO. What do you think?
Yeah, I mean, like people are going to take profits, and if they're interested in space, how could you not be interested in SpaceX? So I think that was probably like the easiest thing to guess. I just pulled up ASTS as well. It's down 7%. It looks like a lot of the other space names are as well. So it's sector specific rotation that you got pumped because of SpaceX IPOing. You're also going to get dumped because of SpaceX IPOing. Although I don't think it's because of the Blue Origin explosion. Actually, I think that Rocket Lab would be in a stronger position in place because it doesn't. But I don't know. I don't
ASTS
follow Blue Origin.
definitely.
Oh,
ASTS
oh,
definitely.
ASTS. Yeah, you're right. Yeah, I went to Rocket Lab and I was like, I don't think they have any relationship. So yeah,
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 but
good
no,
call.
you're right though, because it's like Rocket Lab, sends the rockets. ASTS has a satellite, so like ASTS would get screwed directly by the Blue Origin explosion. Rocket Lab wouldn't. But I don't know, man. Like maybe both ASTS. I mean, ASTS was down 7% today off the back of a 20% dip on Friday, and then Rocket Lab, wow, 14.7% today at $122 per share. So very interesting. We're going to see if this actually continues throughout this week in anticipation of SpaceX IPO. And by the way, Roy, on the SpaceX IPO, bro, have you seen Virgin Galactic? Can I please talk about this for just 2 seconds? Do you know the story around this?
Yeah, yeah, go ahead. Though.
These motherfucking
well,
Wall
well,
Street.
let me just say, like it's so ridiculous that my son, who he invests a little bit, but like he knows it, and he was telling me, I'm like, it's yeah, but go ahead.
Dude, I swear to God, these Wall Street bet absolute degens are bidding up Virgin Galactic, ticker symbol SPCE, thinking it's SpaceX, ticker symbol SPCX, which is not freaking public yet. Like they are buying heavy call options, levered positions. They're screenshotting and bragging about their profits from SpaceX. And meanwhile, it's shitty little Virgin Galactic, the company that offers space tourism rides around the orbit. It like if this is not signs of a super
Profit.
scary euphoric period, I don't know what is, man. Like it's the reading that and seeing the actual posts from these forums where people are like, I made 40K on options contracts for SpaceX. I did this for space. Like, dude, that made me want to sell everything in my portfolio and just sit on cash for 6 months.
Okay, so I think that a lot of the people, like I've not seen those posts. I am familiar with Wall Street bets, but I think a lot of the people that are in that heavy also are just like, hey, this is something that might happen, or it might get a bid just because it's so close approximation. Honestly, it wasn't a bad bet. If people made money on that, great. This is a company that I think has a terrible business model, like abysmal. And so, what's going to happen? The music will stop, and all of a sudden, this stock will tank. Now, that doesn't mean it can't go up tremendously more in the short term, but as it runs up, you run into a higher and higher risk that they will at some point say, "Okay, we're a publicly traded company for a reason. Let's go ahead and just dilute like crazy and dump that on the market." And that's what you need to do as a business. It's not making money that has capital expenditures, and you don't plan to make money. Like I don't know when they plan to, but it's not anytime soon. So if
Right.
you're in that, no shame in it. Like if you're making money, that's great. Make sure you know it's not SpaceX, and make sure you take profits. Be
Roy,
careful.
like, can I please, like, 191% in the past month, 200% at its peak, and this is not even like intraday. It went up all the way up to $8.90, bro. What?
Most of it's over the last 5 days, but yeah.
Yeah, yeah, exactly. It's like, dude, how is this not like? How is Virgin Galactic not the biggest short of our lifetimes on June 13th, the day after SpaceX goes public, and all these retards figure out that, like, oh, wait a minute, this is the wrong ticker. Like, how is that not the biggest short of your life, dude? I don't
Yeah.
understand.
But like everything in space is hot. Like one I actually really do like, and I've done some DD on it, but it's never really made sense to get it. And in hindsight, I'm like, I kind of wish it was VOYG, Voyager Technologies, and of course, They're going to own the next space station, and it just they're a neat company. They're partnered with Palantir, which is why I was like they were on the radar. But yeah, I mean they're going to be expensive, so be careful with that too. But yeah, like this is one of those times where you can kind of see why institutions and hedge funds that short will look at this and be like, this is easy money, right? But euphoria could go on a lot longer than people expect, and there's unlimited downside with shorts. But yeah, that'd probably be a weighted bet for sure.
Yeah, how do they not have an ATM program just ready to go?
They've got to be drawing one up at whatever price level, and if they have another day like this, I would be a little surprised if they don't do an equity. Like if I was a shareholder and I was in there long term, I would actually be furious with the board if they don't take advantage of this.
Tanner Invest says, you guys are trolling if you think people actually think it's SpaceX. It's just Wall Street bets pumping it for the meme. Yeah, man. Let me just invest my hard-earned money to participate in the meme. Are you kidding me? Like, I don't know. I find that hard to believe, man. Like, oh yeah, let me just put $50,000 that I can just lose. But for the memes, though, like, let me get some Reddit upvotes. It's just, I don't know. I don't know, man. Maybe I'm too old. I think I'm just.
And Tanner, I think that most are that, but legitimately, there are people that think that are putting a lot of money in that, thinking it's SpaceX, and that's one of the reasons why we say things like this, just so like if somebody happens to listen, like, oh man, it's not SpaceX. Okay, I made money. I better get out. Like if they want to do that, that's probably gonna work out better than just holding. Yeah, and like I'm saying this, like I'm not hating on people like in the play. I made a lot of money on AMC back in the day, but you got to know, like with bets like that, it's not a long-term thing. It's a trade. You need to take profits. So
yeah.
Can you imagine though, like if somebody's, well, I think if somebody legitimately thought that this was SpaceX, they probably don't know what a market cap is, but if they did and they're looking at this, I had to pull it up. It's a $750 million market cap right now for Virgin Galactic, which if they're looking at things like, oh, it should be 2 trillion, that's a lot of upside. It's not going to get there.
I don't even think Wall Street bets people know that there is an actual company with a company name and description and financials attached. It's like, it's a ticker symbol, dude. It's a ticker symbol. So
most are traders, yeah.
Maybe we're being too harsh on them, but
there's some
on Solo. Appreciate that.
Yeah, it's not hate like at the whole Reddit platform. Like there's some serious investors there that put out some really good DD. I don't really like the platform. So, all right, let's hit the Q&A and hit it hard. A lot of good questions. Keep them coming. Tevis only has 183 million lined up. Oh, actually just 26. So there is some room for more. And
yeah, I'm gonna get like hate from Wall Street Bets community for calling out, like just trying to be, fiduciary responsibility for their own money. They're like, hey, let us burn it. Okay, I have 26 questions bookmarked, and I'm gonna go in chronological order. Trust me, I am bookmarking your questions, guys. All right, starting off, Matthew Johnson. Do we feel Google will try to get into the energy play? I guess think of Google Fiber and how they went into that industry.
I think that they'll have to secure, especially depending on the state. A lot of states have required any new data center project secures their own power, whether they build that out themselves or they contract it. I would say, like, if it was energy play, it's just going to be for them. Like, I don't think they're going to be offering it as a service.
Is Meta more of a buy today than last week? I mean, it's down more today than last week, so yes.
Yeah, I don't like it, but yes.
CoreWeave or NBIS, what are you buying at these prices, or both? I'm buying neither at these prices.
CoreWeave. I'd still love to have a little more CoreWeave. Actually, like prior to the run last night, and as we opened up, I was probably going to get some leaps as well, and it just went, and I'm like, nah, I'm not buying leaps into that. So
Um, I feel like Google can really do ATM offers. No other Mag 7 is vertically integrated. What other Mag 7 can potentially do ATM without major backlash? I mean, Google's getting backlash. It's down overnight. Any company doing an ATM would be down overnight.
yeah. But I think the impact on Google is probably less. I mean, like it's hard to look at Nvidia and see a need for it, but I think Nvidia, like hypothetically, they're like, hey, moon data centers, and we're going to do it, but we have to raise some equity. I think that people would be okay with that. It would be surprising, and it may. I think the stock initially would dip quite a bit, but over like the next week or two, I think the market would be like, wait a minute, this is actually incredibly bullish. That's not happening anytime soon, but just as a hypothetical. Amazon, we've seen a mini revolt already, so I don't think that they could. Apple, maybe. I don't think Apple shareholders are in for it. Yeah, I think maybe Google is the best position of any to do that about the market.
I don't know if
Meta?
I'm the one that's lagging or if it's Roy.
Yeah, I think
You
it's
guys
you.
can let us know.
Can you hear me okay?
I don't know if it's me or if it's you that's lagging, Roy.
It's you. I'll type it here.
All right.
It's you, buddy. Yeah, they're saying
Okay.
nobody's lagging. Roy's not lagging.
All right.
So yeah,
All
we'll
right.
just
All
continue going.
right. What if Google acquired NBIS?
I mean, that probably would have been a good idea a
I don't
while
think it's
ago.
going to happen, but
No, no, no. Yeah, like for an acquisition, you would have to pay above the premium in almost every single environment. And so again, we looked at it, it's like 65, 68 billion. So they would have to come in a lot harder than the what they are just planning to build out, and they would probably get less for it, although it would be a faster build out. So
why did Bezos wreck the space play? Yeah, he just blew up his rocket on purpose because he had puts on the ASTS, probably.
that would have been funny.
I mean, also legal, but sure, yeah, funny too.
Yeah, I don't think so. Like, there's a point where you have enough money, but yeah, no, I think even without the Blue Origin thing, we would have had a very similar reaction anyway.
Did Google say they're going to build data centers with their 80 billion infrastructure news? Yeah.
Yeah,
Any thoughts on Credo? No.
it's a name I haven't heard in a while. Let me technology. Yeah, I don't know enough about them to really comment. So, semiconductor, that's yeah. I looked at them like very briefly, but it was like 6 months ago, or 5 months, something like that. I don't remember anything. So, no, but at the time, I'll say nothing like stood out to me as like I have to get in now. I don't remember.
Who's Google going to crash now? I don't know. Like one of the infrastructure players, maybe. Maybe nobody. Who knows? Can you discuss the NVIDIA event? Yes, we did. Too late to get into Zeta. Do you guys have any positions here? Yes, the Zeta crew is eating well tonight, up 10%, $25 a share for Zeta. Neither Roy nor I have a position in Zeta, but yeah, congratulations to all the Zeta bulls out there.
Yeah, it's being treated like software, and it is. So it's one of those though that I think, I've always said it's a good company and probably a good opportunity. I just don't know that it's a great one, and I still stand by that. But yeah, congrats. I know those bulls have been. It's been like honestly, if you own a lot of stocks that have been in like software, fintech, financials, and you didn't have that much exposure to like the semi specifically, then it was or space. You had a portfolio that it's like wait, this is a bull market? What are you talking about?
Yeah. Are you fully invested and doing portfolio secured puts or truly using cash? Still learning. Yeah, so I honestly didn't know about the interest that I was earning on my cash until I did my taxes for this past year, and I was like, I paid 3 grand in interest, and they're like, no, that's interest that you were paid for holding cash, because I was doing a lot of cash secured puts. But I do have a cash position right now, but I'm doing currently the cash secured puts that I'm doing is on margin. So like I'm committing capital that I don't currently have sitting in my brokerage account. So don't do that. Like don't do that. Um, but normally, yeah, I keep the money sitting in cash and then I do a cash secured put. What would be the best way to play this Google share news? I like Meta and Amazon at these prices, but fear they may also dilute. I
I
mean,
mean, if I would say if you trust the leadership, you trust the direction that they're going to lead those businesses in. I think it's silly when the market does that on one hand and is scared of the capex because they're not spending money because they're like, hey, we hate money and we hate our shareholders. It's because they see an opportunity.
yeah, and you can't go wrong with Meta and Amazon, man. Like they're both relatively undervalued in this market, and I think both have great upside potential. So, is SMCI being overlooked, right?
I mean, like they're sketchy. So I don't like them just because of leadership, and I can't invest in them. But probably yes. Like they're still, even as sketchy as they are, and I can't touch them because of that. They probably are. But it's if you look at just the numbers, the balance sheet, and the positioning that they have in the market, it shouldn't get the same premium as it would if it didn't have the leadership questions. The I mean they've there's at least three things with SMCI that they've done that are so sketchy. So
I mean, their
be
CEO is
careful.
a hustler. That's what I call grit. Okay, he's got that
Smuggler,
immigrant
you mean?
grit. Okay, I'm not. I want a CEO to get their hands dirty, not be away.
Not their balance sheet,
Not shy away. Well, their
their SEC
dirty,
filings.
their books dirty. Just get in there. Um, should Tesla get taken out of the Mag 7 and replaced by somebody else? Seems when everybody talks about the Mag 7, people really don't talk Tesla anymore. Yeah, dude, like let's have this conversation in a couple of months after Tesla and SpaceX merge, and it's like the third, uh, or hell, maybe even the biggest company in the world, but definitely top four, I would say, biggest companies in the world. Because like you'll have Tesla that's like what 1.6, 1.7 ish, and then SpaceX is going to be like probably 2.5 by the time it IPOs. It'll be top three biggest companies in the world.
Yeah, the problem only problem with Tesla is like they're in between like two ridiculously powerful products. The EVs, I mean, they're still there. They're building, out the ecosystem more. The services is a real part. Energy is good, but it's not like the main story of Tesla. It's great though. On the AI side specifically, like same thing. But what's coming is, of course, robots and robotics, and they're going to be all over that. They do scale extremely well, and a lot of the other players that are in robotics, there will be a lot of other competition too, much like what we're seeing with data centers. But it's hard to scale, and it's hard to build something of that type and make it credible and send it to market. Tesla is going to be a player there. The challenge is, I think a lot of Tesla investors looked at robo taxis as like, man, this is going to be the next leg up for the business. It's going to be incredible. And I was like, it'll be okay. Like I don't think it's going to be a vertical that like does ridiculous things for the revenue, and there's a cost to the revenue as well because it is capex. Same with wholesale driving. Wholesale driving is magic, but really the next big thing, which will truly cement Tesla's role as magnificent, is robotics, and that's probably like 5 years out from being meaningful. Market might start pricing that in early though, so I wouldn't say you have to wait 5 years for that as a shareholder. It might be 2 or 3.
Yeah, for sure. Do you think these massive IPOs throw a spanner in the works as people will pull capital from their winners to invest? Yeah, absolutely. Um, they could, I mean, in this euphoric market, you can definitely sucker a lot of people in with a big IPO. And this year, we're going to have like 3 or 4 big IPOs.
Yeah. I didn't see you capture this question, so let me throw this up in response because I saw it was asked a couple of
New,
times, and I am
new
a
CFO.
shareholder in this company, Nubank.
Yeah.
Nubank did appoint a new CFO. This was planned. This wasn't unexpected. I know the stock is down, and it's like almost every single stock when the CFO leaves, retires, is fired, is like 85 and dies of a heart attack. Doesn't matter. The stock immediately will just go down. It's just algo stuff. So I don't personally have any concerns now. They've appointed Rod Livingston as CFO coming over from Visa. I don't know anything about him, so other than just what you read right here, but he seems like a credible guy.
He spent 12 years with Visa.
Yeah, yeah, yeah. I'm just saying, like, he seems credible based on what I'm reading here, and I'm sure Nubank would hire somebody that's very good. I don't see any glaring concerns. It's just normal reaction to any time a CFO leaves. People are like, "Oh man, a CFO left. It must be that they're committing fraud."
18 years with Capital One.
Yeah, a little bit
Um,
of experience under his belt.
a little bit, just a tad. Um, all right, let's keep going here. If Nvidia can't catch a break on its stock price after 2 unbelievable quarters, what is going to make it move? Price prediction. Yeah, like I think Nvidia, goes for a run, then takes a break for a while and stays flat, and then goes for a run and then takes a break. Like it's a massive company, man. I don't think there's like, one singular catalyst that's going to make this thing like run. More of it is macro thesis. And I mean, what Nvidia's what uh let's see. What's their performance here today? They're 18.8% up year to date, man. I don't know what you're asking. Like, oh,
Yeah,
they can't
and
catch a break on their stock price. Why? Because they're beating all the indexes.
they're relatively flat. Like relatively, they're up from last fall, and that's. I think that this is just showing like the where we're at in the market. It's a greedy time when you look at a stock like a normal year, you look at a stock and it's up 20%. You're like, hey, it's half a year up 20%. That's fantastic.
Yeah.
You look at Nvidia up 20%, like, why am I invested in this stupid name?
Yeah.
Dude, it doesn't take a lot of 20% over 6 months to radically change your life if you can continue to do that. So NVIDIA is going to be a compounder. I do think, and I've said this a number of times, that NVIDIA is probably going to flirt with 300 by their next earnings. So that's in 3 months. I think that this is just the beginning of the run, and it's one of several vectors, but a lot of it is they're undervalued relative to where they should be. They won't get the full deserved premium in a similar way as Micron, partly because some fears of cyclicality, and the other is the massive market cap. When you're the largest company in the world, that huge, that substantial, you're not going to have a lot of up 15% days unless the market's up ridiculously. Yeah.
All right. Yeah. Like I'm not, I don't think you're buying the biggest company in the world to be like, oh, I think there's a 10x here. You're just not
Well,
going to do that.
I
I
mean,
mean,
like
not
if
in the
you're
short,
looking 20 years out, yeah. But yeah, like you're not going to get a 10x in the next
bro.
5 years in
He's
Nvidia.
not happy with 18% up year to date. What do you think 20 years? He doesn't know that, doesn't comprehend.
Yeah, oh, that's more than. But yeah, yeah.
No, I mean like they're not the same person. Somebody who's like, 18%, that's peanuts, to somebody who's like, oh, let me invest for the next 20 years. No. This is a straight off the Wall Street Bets community forums onto this podcast. We answered this, Josiah. Just skip back like 10 minutes. Who is buying Wix?
I already bought it at a higher level. I thought it was undervalued then, and I stand by that. When they had earnings, um, base 44 is great, and that's the thing that I care about the most. But I was more bullish on other names, and so I didn't add. And I just like, hey, I'm not going to sell either. I think the thesis is intact. Now, if we're at Wix at this level, a month or two out, and I have some other covered calls that I intentionally sell to take profits or take profits elsewhere, I'd probably buy more here. But I think that we're going to be quite a bit higher by that time.
Yeah. Are covered calls really worth it? Feels like everyone is underwater on NBIS Palantir. Yeah, like I think covered calls are still definitely worth it. I mean, yeah, there are times where I have to roll out, but you're cherry picking a couple of names that have gone on terrific runs. Like for Nebius, for example, yeah, sure, I'm underwater on some covered calls that I'll probably have to roll out, but I also do them paired with cash secured puts. And so I just closed my 160 cash secured puts for 70% profit in 2 weeks that I held them. So once you do it consistently, like it starts adding up in a big way. And even if it can just add, you know, let's just say you're doing it safe, it can just add 10% a year to your performance. Well, that's the difference between a great year and a good year.
And like there's multiple purposes for covered calls too. Like some people just use it as a strategy to get in the market. Let me give a quick example here. So Air Test Systems, I think back here, I sold with a third of my remaining position. So it's like 10% of my original shares because I've taken a lot of profits in Air. And I ended up selling, when it was a little above $100 a share, out a month at 150, which represented close to a 50% price premium. And I think I got $400 per contract, which is obscene. Like it's ridiculous. But the other function of covered calls, and Tevis alluded to this when he mentioned Nebius, is sometimes like, even though you're in a position, you have a massive amount of it, you were in for a low price, greed can take over and make you do stupid things. And when the market pulls back, like you see with Rocket Lab right now, you're mad at yourself because you didn't take any profits at all. And suddenly you're back to where you came from. Rocket Lab, I don't think will do that. But so it's also a great device to either bank some profit through covered calls or to force yourself to take a profit. Now you have to stand by your guns, and when you're like deep in the water and you're like, well, there's plenty to take profits there, but I want to roll out, that's a whole different conversation. But I would say it is, but you also have to understand there is some downside, like you said. Palantir, I lost a lot more in my position than I wanted to because of covered calls. I still think it's worth it though for me.
Yeah. Okay. What would you do with 25K fund money for 1 month time frame? Not financial advice. Travel.
Yeah, I think he means investing. Like, what would you do for a 1 month swing trade? But I was thinking the same thing. It's like, man, that's an epic family vacation right there. So,
25K 1 month time frame depends on what my goal is, but like if it's fun money, I might buy some calls on Nokia. Honestly, that's like the top of mind thing for me right now.
Oh, wow.
Yeah.
I'd probably buy calls on CoreWeave even after this run.
If I can just, we got to get you a hat and like a little jersey, like one of those like NASCAR drivers with like the stickers, so your sponsorships. What do you guys think of? Oh, here we go. What do you guys think of Nokia? Appears to be a new retail fave. Yeah, the insider buying is the thing that gets me really interested. I mean, the thesis is interesting, but the fact that all of these insiders across the board are buying shares in big amounts consistently is kind of exciting because I'm like, okay, what do they know behind the scenes? Of course, in the Nvidia sort of like backstop or the Nvidia investment is comforting as well. I don't know enough of it to make it a long-term position. Right now, I do have a position, which I'm writing covered calls on, of course. So if it runs too fast, then I'm out. But I'm thinking about adding more, quite frankly.
What is it in the thesis that you find particularly compelling?
I just said like the insider purchases. And the thesis. I think the entire like edge compute thesis is going to be really interesting. Right? We talked a little bit about it in the beginning of the show, like bringing the whole AI piece closer to the actual device. Um, what they're doing in that space, the AI revenue being up 49%, and keep like that's still going. I think that's going to be something that pays dividends, and they're just going to keep compounding that. Um, but yeah, I think the infrastructure piece of the thesis is the most interesting structurally speaking. It's the all these like other things that are going around the company that like adds urgency to me, doing my DD.
Yeah,
I would
I
love to
didn't
have
have
someone
time.
on to talk about it, honestly.
Yeah, I didn't have time with the data center article and the final research I had to do there to really dig in. So I don't know. I only know what Teva shared here and what Amit wrote about on his Substack and what we talked about on Saturday, I guess it was actually.
Mm,
So the one thing that I'll say, and so I see some people that are invested in this that are very credible and have done their DD. But like you said in that comment, there's a lot of people that are just aping in that have not done a lick of DD. And that always makes me nervous if I don't have a position just because I'm like, hey,
yeah,
some hopefully that are they're going in, and if you guys are listening, if you're in that name and you've not looked and done any of your own research, make sure you do that
yeah,
because at the moment that it's down 15% and other names are up, you might just lose all conviction because the only conviction you had was following somebody else or in just the ticker going up. That's
yeah.
it's not conviction.
Is this space dip a good time to buy any space companies if you don't have exposure? Yeah, I mean, if you want to be in it for the long term, sure. I would just like scale in over time. Just be careful because like this dip can keep dipping.
I
But
think with some names, yeah, like ASTS maybe, and they're impacted, of course, by the Blue Origin thing. Rocket Lab, I mean, I'd probably say no. I think that they are well ahead of where they should be in terms of stock price action, and also behind their Neutron rockets. So I'm not bearish on them at all, but I like the company. I wouldn't be jumping into that one personally. But yeah, if there's a name you're looking and you want to hold it long term, sure.
um,
Yes.
possibly, yeah,
Yeah, I never really found like Blue Origin hired some brilliant people. I thought that I liked obviously SpaceX's positioning better, and I think the market does too, easily. And then Rocket Lab, it really impressed me when I did DD, and I didn't buy like an idiot forever ago. But yes, Sir Peter Beck is just incredible. He's built a great company. I think that it's an easy duopoly between the two. There will be others as well, but like you have to remember this is a hard business to break in, and there's going to be a lot of failure. And the Blue Origin one is just a reminder. SpaceX, as incredible as it is, they've had a ton of failure. So the harder it is to break into a space when you're just starting up, the deeper your moat is. And both these companies have very deep moats.
yeah. I don't think it's pump, man. It's up like 0.6% after hours, so that's not really a pump. Am I doing covered calls on NBIS? Yes, I am. I have 275s for next week and 260s for 2 weeks from now, which are underwater. And like I said, I just wrote a couple of 340s for this week just for fun. Um, but half my position doesn't have anything. It's just like I'm not writing on it. So as crazy as 340 in 4 trading days sounds, I'm still not going to do my full position on that because like this thing has done crazier things in the past. Um, is space ETFs the best bet on SpaceX without risking a rug pull, or would insect rotation limit you to returns in an ETF? Depends on what the ETF has, honestly. That's what I would say.
Yeah, I'm not confident in the answer, in answering that monkey. You'd have to look at the individual ETF. Make sure you like the other names too. If honestly, if you were just like wanting SpaceX, don't worry about like the valuation and stuff. If you plan to hold it 10, 20 years, I think you'll be in a fine place. I just wouldn't, I'd be careful about building your entire position at IPO. But, if you want to apply for, for a relatively small for you amount of shares at IPO, there's nothing wrong with that. You just hold on to that. But if you're like in the area and you're like, I just love space in general, ETF is probably the way to go. I would just wouldn't buy an ETF for one name. I think it's a mistake, whether it's private or public.
Yeah, I mean, I think the entire space sector right now is like really overly inflated, and that's going to be reflective in the ETF price as well. Uh, Tevis Tom Lee was talking about you today, saying people are rage quitting crypto. How relieved do you feel now that at least a portion of your money is not dead? Yeah, man, like people will give you shit for leaving a position, even though it's a portion, um, even though you're the one that's booking the losses, and even though, yeah, I rotated the money and immediately got a pop because I put 40 grand into SoFi Leaps, and now those SoFi Leaps are up like 30 something percent in 2 trading days. And if I were to sell the SoFi Leaps and buy the BMNR back, I could make up like half of the losses that I had in 2 trading days. And people would still be like, oh, yeah, but you sold, because it's like a cult type of, thing. Like you can't, if people were as loyal to their spouses as they were to their freaking favorite holdings, like the world would be a much better place. Because these guys get fanatical about this shit, man.
And honestly, I love things like this. Oh, actually, so I don't forget, I was actually planning to make a video reacting to your video, or at least like the one little bit about you leaving. Put your face on that, and like he sold, is now the time to buy, or something like that. Um, all jokes aside, like I probably still would make that video, so that's not a joke. But like in seriousness, this is what you expect every single crypto cycle. So if you've not been in crypto in 2022, it's easy to not recognize every crypto winter. So 2018, 2022, and now 2026, it'll go from the previous year of like, dude, crypto is gold and everybody wants in it. Everybody wants exposure. Companies need to have this on their balance sheet. Why wouldn't you invest in anything else? To crypto is a dog, it's a dud, it's a scam. Why would anybody bother investing in that at all? And when you start seeing that with more and more frequency, and believe me, I'm seeing it, that's when you know if the bottom isn't in, it's pretty close. Now, my
Mhm.
thesis has been the whole time that crypto winners are real. We've seen that. I wanted to give myself 2 years with BMNR to accommodate a crypto winner, which we're doing. I think that we'll be out of crypto winter by the end of the year, and I think that last quarter is going to be very favorable to crypto. So you might like if we're at this environment, I think just 2 months from now in August, and
Yeah.
we're here or even lower with Ethereum, Bitcoin sentiment is even lower as well. Which like there's crypto has its own sentiment index. It's not pretty at all. Yes, yes.
Like,
But if we're here, I'm going to start making some pretty silly sounding at the time videos on crypto and crypto predictions, and we'll start positioning my portfolio accordingly. I've not bought anything other than like Figure, which kind of intersects crypto a little bit, just because I'm like, hey, this can last longer and be steeper than people expect. But yeah, we're close.
yeah, like exactly. The market is about making money, not holding it until you die. At the end of the day, like I very clearly mentioned in that video, like AI is the new crypto from a market sentiment perspective. It's the new shiny object that the market is chasing. There's going to come a time when Bitcoin and Ethereum can actually hold key levels instead of fading away, um, on such weakness. And the fact that the price is like at 2000 still is not just a me thing. It's not like, oh man, Tevis, it was capitulation and Tevis sold and now we're going to go up. It's like, dude, everybody is selling and there's no real buyers. That's what it means when the price doesn't go up.
Yeah. So real quick here, just so we can characterize it. This is the where we're at with crypto. It's 35. It's fear. And if we look at sectors here, let's just do year to date. We can see performance. You're like, hey, Bitcoin miners are doing pretty great. It's because they're not Bitcoin miners anymore, at least not for long. Every single one of them, or almost every single one of them, are actually in the data center AI trade. And if we look at, oops, that's the wrong one. Those that are lagging, do all. Okay. Then you can see, yeah, DeFi lending and yield. A lot of that's crypto. DEX and trading. A lot of that's crypto. The only other thing that's there is China, which I mean, it's China, and then real estate, which of course, like even stable coins and real world assets, which is a huge thing. So it's been tough, and a lot of these names are down substantially more. But it's a normal crypto winter. It just is. Every single time in the bull cycle, people say this time it's different because X, Y, and Z. In the winter, you'll also hear that. I have not heard as much this year, but part of it was tied to quantum, basically breaking these chains and making them, very, very sketchy, and institutions would not build on them as a result. But yeah, we're here, and if we're still here a couple months from now, I'll have a lot more crypto positions, and I won't be calling it the bottom necessarily, but I'll be positioning heavily in it.
Yeah.
What about you, Tevis? Are you looking to get into the next upswing for crypto?
Yeah, I mean, like I still hold a fairly significant PM&R position. I would definitely not be against getting back into crypto when it's again on its upswing, right? Like I would rather buy when it breaks the key technical downtrend and starts, a new formation upwards and miss out on some of the gains, as opposed to buying like early and potentially sitting on dead money for like 6 months.
And
So
are you more apt to get into or build out even more like a digital asset treasury, the cryptocurrency specifically, altcoins, or something that's more of a hybrid like a Robinhood?
Well, no, I definitely wouldn't invest in Robinhood for the crypto aspect. I'd invest in Robinhood for Robinhood. I wouldn't invest in altcoins. I would probably just say, uh, Bitcoin or Ethereum straight up for long term, and then maybe like a digital asset treasury company for short term.
Love it. Yeah.
All right, let's see. Does Google issuing an ATM have any implication on management thinking valuation is high, or is it just the AI build out is longer? No, this is just when they needed money, so they just did it.
Yeah, and they're taking advantage of that high share price. I don't think it's them saying that they think it's unsustainably high or ridiculous or anything like that. If they did, you would see insiders dumping shares. That's not what you're seeing. Now they are selling like any company that has a lot of SBC, but it's not people getting rid of like 90% of their shares.
Yeah. Are you thinking of buying software now? Do we think software apocalypse is over? Yes, we do, and yes, we might. What's your thoughts on being mostly in cash? The past few months have been running, portfolio hitting all-time high. When do you guys decide to protect your gains? Great question.
I would never really want to be mostly in cash. I want to be mostly invested. When I go heavy in cash, it's when it's like 15, maybe even 20% of my holdings. And it's usually after some big profit taking. Um,
Yeah.
Usually, if I see some concerns or weakness in the market, then I might hedge. And I do have one hedge out there, although it's doing quite well. I think the market does not care about Iran and the Middle East at all.
Yeah.
Oil spiked a lot today. VG and the hedge that I have is it's doing okay, but I have some calls specifically in addition to my shares. But yeah, I think it's the smart thing for investors to be fully invested if you have the long term mindset. Now, if you're like 2 years away from retirement and you have all the money that you need, it might make sense to sit in bonds or heavy cash or something that is going to be more stable even in a drawdown. Protect those gains. But the reality is, for me, I'm probably at least 20 years away from retiring. Now, I might slow things down in like 15 years, but I love what I do and I plan to keep doing it, even when financially we no longer need that. So,
Yeah, I mean, I'm pretty much zero cash right now, but if you remember back in January, December, I was like 20 cash, 18% cash, because I was expecting a drawdown and we largely got one. So I think at this point, I'll probably need to, you know, book some profits on some things, reduce my exposure somewhat and build that cash back up. And like, I think 10 to 15% gives you a lot of downside protection for any drawdowns that you might get. Because like what you'll get is like you'll get certain industries that are drawing down, like AI is running, but software's a great opportunity, right? And so those are the moments when cash comes in handy. Any ghosts? No, no ghosts today. I just want to go to sleep. um, have you all looked into big energy like CEG or VST?
I don't remember BST, but Constellation is the other one. I did actually look into it a while ago and considered it and decided I have higher convictions elsewhere. What is it doing? Oh, it's actually down 27% year to date. Yeah, I've not kept up on it, and I was probably looking at it like 3 months ago. Didn't get in. I don't think I will get in.
Any hope for Meta? Yeah, I think Meta is going to be fine. I think they're going to hit $1,000 a share, within the next 12 to 18 months, and the market is going to be slapping their forehead around how the hell did they let this thing go at $600. Always happens. I think it's going to be fine.
What'll be interesting is when I start saying that I'm very tempted just for speculation to get into Meta as a swing. That's when you probably know it's just ridiculous and a stupid buy at that point.
Yeah,
we're not at that point yet, but
we're getting there.
It's very attractive. It's tempting. I was just gonna say no. Just say no to drugs and Meta.
Yeah, that's get that on a t-shirt. Are we buying ETH, Bitcoin, or BMNR? I think we just answered this earlier.
I will add the only DCA that I have is Bitcoin. I buy the same amount. It's a certain percent per year of my income that I'm buying in Bitcoin, and it's just set and forget.
Yeah,
same amount every week.
Tevis, being in Canada, are you familiar with HOVR? If so, what's your thoughts? I don't know HOVR. And I don't.
There's eVTOL.
Yeah, I don't have any eVTOLs, nor am I really interested. Drones was something that I was looking into. That could be an interesting play. Yeah, but not eVTOLs.
Yeah, I'm more excited with drones than eVTOLs. I mean, eVTOLs, it's pretty clear just because of how many little companies like these three. These three are bigger ones actually. There's a ton. There's a ridiculous amount. I was looking at them late last year and early, like in January, and it's hard for me. Like I think I've changed my mind on Archer and Joby. I've actually flipped them and say Joby is probably the highest quality, but
yeah,
I don't know that I want to invest in them. There's too many players and it's too hard. And sometimes it's okay to look at something and be like, I'm going to put this in the too hard bucket. I'm not really sure. So why not invest in something that's less speculative for you?
Yeah, exactly. What's the best energy play for data center? Boom. I think Bloom's a good one. I'm not sure.
In hindsight, for sure. At the very least, that's up massively. Like energy is just a space where I think that anything that's building out, adding capacity, or had excess capacity to sell, which is not many, just because we've so lagged behind on energy infrastructure here, is going to do quite well. So I think it's just a question of where your firmest convictions are, and it's nuclear is going to do well, LNG is going to do well, oil and gas is going to do well, solar is doing better. They've made some interesting pivots. SMRs, I mean, like, you name it.
Yeah. Thoughts on ServiceNow having a higher EV to EBITDA multiple than Palantir? I think ServiceNow is still undervalued, honestly.
Well, does that mean you think Palantir is?
I mean, relative to ServiceNow, sure.
So you just said ServiceNow is undervalued. So Palantir is growing at more than twice the rate.
No, Palantir's growth is amazing. And Palantir is what 130s, 140s. But I think ServiceNow is, what's that?
It's up higher now. But yeah, here's the probably the post that spawned this. And Um, Fraser, if you don't follow Arnie, you should if you care about Palantir. Here is, and so you can add service now to this after the run, but it's cheaper despite growing twice as fast from the enterprise value over EBITDA over the next 12 months. And a lot of that is because of the price or the growth of Palantir. Obviously, Snowflake, of course, went on a recent massive run, CrowdStrike as well. So this isn't saying Palantir is cheap. I think a lot of people think Palantir is the most stupidly priced stock on the planet. It's just ridiculously expensive. And the actual reality is, at least in my mind, I don't think it's cheap, but I think it's a little expensive. I don't think it's that expensive at all.
Yeah. Could NBIS announce Anthropic deal this Wednesday? Yeah, absolutely. I don't see why not. They sure could. In which case, 340, definitely doable. Hope not, but we'll see. Okay, cool. Let's see, maybe a couple of other questions. I know.
Yeah, Dragos 7019 put up his comment there. I saw this. It's not a company I follow at all, but it's kind of showing you. Let me see if I can find one of the original posts. What's going on in the space? So I'll just show you the chart, guys. Before we pull that up, don't look, Tevis. How much do you think Hewlett Packard is up today?
I think I saw. Was it like 30% or something?
40.63%.
Yeah, that's.
And this isn't because Hewlett Packard has become a meme stock. It's because of what's happening in the AI space is impacting all these names, including Hewlett Packard. So you're probably feeling pretty good, Dragos, when you're up 10%. And then this is just a thing of beauty. So some of that will probably fade by the morning, but congrats, man.
Yeah, definitely. Congratulations on that. That's a big one. Lots of companies like this are just having huge pumps off of earnings. All right, let's see. Do you guys see any type of real estate in the future with all these data centers needing to be built? As in, like, us buying real estate? Or I don't know what he's asking.
I'll interpret that because I'm not sure it's a. Yeah, I guess you can rephrase your question. Maybe we were not understanding it, but like, is real estate dead as a play in a sector? No, it's such a huge part, even still, of the American economy. At some point, it's not going to be dead. What happened in Hormuz and inflation and keeping rates where they are definitely hurt, and there's some overhang just because of the sugar rush during COVID years at the ridiculously low interest rates. And congrats for anybody that took advantage. Sadly, we moved and left our low rate behind. But no, real estate will come alive again at some point in the future. It'll be a good play. There's a lot of names that are positioned well for that, but it may be a while longer. Like when you're in an environment, and I'm not sure. I doubt that it's gone down. Have you looked at the rate cut probabilities?
No.
Most of the real estate stuff. Now there are incentives, and real estate's always a local market, but most of it, how it does, is just tied to rates. And so we're currently at 350 to 375. And now, yeah, it's actually not changed too much. I think there's a little bit more over here. More than half the people are expecting at least one rate hike. That's not a happy environment for real estate. It's just not. Now, that's not going to kill it. It's already pretty much of a laggard at this point, outside of some local markets. So if that was your question, I don't think that'll really change it. It's just interest rates.
Yeah. Tanner Vest says, do you guys just deal with big taxes end of year with all the calls you write, swing trades, and other gains? Yeah, dude. It's extra money that you're making on the side. You just pay a portion of it to the government who took on all that risk with you.
Yeah, that's one of the really good things that has happened in the last couple of years. The timing of my Palantir gains that I took landed at the same time that they reduced. They were long-term capital gains tax, but they reduced capital gains impact for most regular individuals. I I have a great career and they pay me nicely, but it's not like a super high salary thing. So I can take in quite a bit of capital gains taxes and be perfectly fine as far as taxes. Like I'll have to pay some, right? It's not anything crazy though. Even with short term, it's not too bad. But I try to aim most of my long term conviction stuff in my individual account that's not tax advantaged, and anything that's more speculative or swing trades. Mostly, I try to do those in the Roth and the IRAs.
Yeah. At the end of the day, like if you're making an extra profit, like I feel like people obsess too much about taxes, and they're like, I'd rather make less money to pay less taxes. Like I think that's counterintuitive, my guy.
Yeah,
Um, so if you're
like if
paying taxes, yeah, it means you made money.
yeah, like let's just think about if you were in a name that you're like, hey, Hewlett Packard, I think it's going to be pretty decent, and it goes on this colossal run. You've made some money. Are you going to be really upset that you've held it for a week and so you're going to take some profits and pay short-term capital gains tax? No, because
Yeah,
you made a ridiculous return in a short amount of time. So be happy
exactly. Life advice: just be happy.
and be glad that you're not. Is it Denmark that authorized taxing unrealized capital gains?
Netherlands, I think, maybe
Netherlands? Okay, yeah. It's
one of them.
what?
Fucking idiots.
Oh,
Just
yeah.
just make it illegal to invest. Why don't you? And then like seriously, like if you want to drive away all your capital, like you can just circumvent it and just do it way faster like that.
Yeah. Yeah, it is the Dutch government, the Netherlands. I wonder if Adyen's going to move out of that as a result.
Well,
Yeah, that's a
I mean,
good point too.
there's
Come on
another
over, guys.
we know.
Don't go to Canada. Come to the US.
Yeah, definitely don't go to Canada. Um, this is like in case they're watching. I'll say what I really think in Morse code with blinking, Jer. Um,
Put up Han Solo 88's comment too. What if you had unrealized losses? Are they going to refund your money? That would be nice. But like the honest truth is like it's it can be useful, to harvest losses for taxes and everything, but it's not. You're limited in the amount that you can declare. It's usually just to offset gains plus like $3,000, I believe. I have to double check that every single year. And yeah, like unrealized, they will never ever do that. So you'll be able to claim those when you actually sell. I'm pretty sure it works that way for the Netherlands thing. I don't see how it could work any other way. Otherwise, if you had a bad year in the market and all of a sudden your government is making a lot less money for taxes because you're doing the stupid thing and taxing unrealized gains and there's no gains, then you're refunding people afterwards. It's like, okay, your government is like going to go bankrupt.
all this government talk at 2 a.m., Roy. You're just trying to rile me up right now because like refunding
Freddie
money.
notes. Actually, I'm curious on this. So here in the United States, we have IRAs and Roths, and I think most people kind of understand how they work. Freddie notes that in the UK they have 20,000 a year tax free for ISAs. I think that number. Well, anyway, I don't know the UK like super well. I was only aware of this because Robinhood was going into that with that and the SIPs as well. So the closest thing that we have in the United States is probably the IRAs, just general individual retirement account. And the way it works is there's no tax up front. You can deduct that legally from your income. On the back end, once you hit a certain age, the government will force you to take gains because they don't tax unrealized gains, and they want their tax money before you die. My parents are running into this scenario where they're decently well off, and they don't need usually to take the gains out of the market, but they're forced to because the government wants their tax money. Roth is a better vehicle. If you're in the United States and you don't know what a Roth is, do some research. Roths are amazing, even if you think you're too wealthy for it. There is a way to convert into a Roth, a back-end Roth. But that one, you pay the taxes up front. You're limited in what you can actually, much more limited. I think it's 7,000 or 7,500 this year. They keep increasing it. So I just max it out and kind of forget about it until the next year. But you don't pay taxes on the back end. And as a result, you also don't need to be forced to withdraw it at some point. So it's a great vehicle.
Yeah, we have the same
Do
thing.
you have anything like that in Canada? The same thing?
Yeah. So Roth is like your TFSA. So it's a tax-free savings account where you just don't pay taxes on it. And your IRA is like your RRSP in Canada, where it's like same thing. Like you get a tax deduction from your W-2 for whatever you put in, and at some point you can start withdrawing that, which is like it's kind of really shitty because like it gets taxed as income when you withdraw it, and good luck, you know, having something compound for 40 years and then starting to withdraw it as income. It's like unless you're going to live another 40 years, like you're going to pay like the highest tax bracket a couple of years when you withdraw it, and that money's going to lose value. Taxes are going to go up over time. Like I've stopped contributing into mine altogether because it's just not worth it. Because like it's a trap. How am I going to get that money out of there eventually?
Yeah. Yeah. Here's real quick what we have in the United States. So I say 2026, 2025. This is substantially different from a couple of years ago. So if you are married filing jointly and or surviving spouse for long term, this is the things that you held for a year. I mean, you can be making a ton of money in the market and you're okay.
Yeah.
But short term, it's a little bit different story. But even still, it's not like there is a 0% rate there. There didn't used to previously be. So it's it's not an ISA. It's not an IRA. It's not a Roth. I think those still make a ton of sense. And if you can wait on the money, you don't need it right away. Max especially out the Roth. But outside of that, like it's a good problem to have. It's like covered calls. You sold conservative covered calls. They got blown up. It means you made a lot of money. You have to pay a lot of taxes. It means you made a lot of money. That's awesome.
Yeah. Okay, we're officially over 2 hours. I think we're good to wrap there. Roy, how do you feel?
Let me look up one comment that I want to make sure. Okay, yeah, it's not a. Okay, yeah, perfect. Good to wrap.
Thanks, everybody. Appreciate you spending your Monday here with us. Congratulations to NBIS and CoreWeave shareholders in the chat. And we're going to be back on Friday, and we're going to be talking about
CoreWeave.
Yes, CoreWeave, and also all the other stocks. Thanks again, and we'll see you then. Goodbye.
Later, guys.